Thank you very much, Helen, and welcome everyone to CPA Australia's webinar, Barriers to Implementation of Technology in Businesses and How to Overcome Them. My name is Jana Schmitz and I am the Digital Economy Policy Lead at CPA Australia. We have people joining us from all over the world today. And before we start, I would like to take a moment to acknowledge the traditional owners from around Australia and pay my respects to elders past, present, and emerging. I extend this acknowledgement to all Aboriginal and Torres Strait Islander people who may be joining us today. I would also like to acknowledge that today we are joined by the CPA Australia Board Deputy President, Professor Dale Pinto, FCPA, and Director Louise Cox, FCPA, Warren McRae, FCPA, and Helen Lorigan. Thank you for joining us today. It's my pleasure now to introduce you to our expert panel of speakers. Firstly, we will hear from Dr. Christina Allen. Christina is a CPI member and a senior lecturer at Curtin Law School, Curtin University. Then we will hear from Professor Denise Jackson, who is the Director of Work Integrated Learning in the School of Business and Law at Edith Cowan University. After that, we will hear from Professor Rahat Munir, CPI and CA member. And Rahat is the head of the Department of Accounting and Corporate Governance at Macquarie University, Macquarie Business School, Macquarie University. Finally, we will then hear from Professor Grant Michelson, a professor of management in Macquarie Business School, also from Macquarie University. Now, after the presentations, I will share a panel session for which I will put your questions to our experts and maybe add a few of my own. So please post your questions into the Q&A box during the webinar. You find the Q&A box in the bottom right corner. And for any troubleshooting queries, just send through a message to Helen directly using the chat box. It is now time to commence our session. And Christina, apologies, before I hand over to you, just a quick note to the audience. I will post a link to the research report authored by the panelists into the chat box shortly, so that you can all have access to the full report and look up some of the findings that our panelists will discuss now. So Christina, over to you. The virtual stage is yours. Thank you.
Thank you very much. I'd like to start with the significance of technological advances in the context of an economy first. 4 years ago, in 2018, the Australian government predicted that harnessing technological advances could bring improvements worth $315 billion to the economy over 10 years. Based on Australia's GDP of roughly around 1.88 trillion Australian dollars, this accounts for 1.7% of GDP annually. That's what we should see through adopting technological advances. Consistent with this statement, a recent survey of accounting professionals in Australia and Southeast Asia found that the use of technologies such as data analytics, customer relationship management, CRM, enterprise resources planning, ERP, robotic process automation, RPA, and artificial intelligence, AI, was higher among high-growth businesses compared to the organizations that didn't show any apparent growth trend or those who contracted. As we see that there are barriers and challenges to adopting new technologies, we conducted a research to find those barriers and challenges, and subsequently how organizations could leverage their capabilities to yield efficiency dividends and to benefit the economy as a whole. And we are particularly interested in the function of accountants at large, without limiting to a particular industry or sector. Accordingly, the research was carried out by defining research participants as personnel in the accounting industry, as well as accounting department or functions within organizations. They could work in any sector, private, public, or not-for-profit, or of any business size, small, medium, or large. So for this study, we focused on the common IT solutions such as CRM and ERP, and also different types of technology mentioned in the accounting space, namely RPA, blockchain, AI, and cloud computing. CRM manages business processes relating to customers. Similar to CRM, ERP manages business processes, but not necessarily limited to the functions to those related to customers, as it can be seen as a larger concept, such as the ERP solutions can integrate CRM functions. RPA executes commands upon event triggers, generally to replace predictable human behaviors. Blockchain is an innovative technology to replace the traditional form of database. So it's a shared database where information can be transferred real time and with transparency between trusted parties without necessarily disclosing each other's identity. The replacement can take in part with the continued use of the traditional database or wholly for targeted transactions. AI, when it further evolves, is expected to replace human capabilities to interpret and make decisions in organizations with less errors. Cloud computing refers to any hardware and or software provided over the internet. It was identified as a separate technology type for us because the financial benefits from using cloud computing have been reported in literature. The classification of technologies into these 6 categories gives a good sense of what technologies accountants use in their profession, enabling us to find organizational barriers and challenges to adopting new technologies. Now, we understand that there are various factors that influence technology adoption in organizations. In literature, these factors are commonly approached with an integrated, what's called technology organization environment, TOE framework, or the individual behavioral model, such as the technology acceptance model, TAM. Both TOE framework and TAM are popular. The TOE is almost exclusively used to capture a wide range of possible elements influencing technology adoption in organizations, whereas the TAM is directed towards individual perceptions and acceptance of technology within organizations. For our purpose, we use the factors identified under the 2 methods and categorize them under 3 types of factors. So organization and technology-related factors and regulatory and economic factors. Although this grouping provides alphabetical representation of TOE, the letter E in our grouping differs from the E in the TOE framework. In our model, E represents economic coupled with regulatory factors, whereas the E in the TOE framework refers to environment. We consider economic and regulatory factors sufficiently encapsulate the environmental factors while giving more specific reference to different factors that influence technology adoption. While the factors under each classification will be seen in more detail later, to explain briefly, examples of organizational drivers are efficiency improvement, cost saving, client experience, development of an internal culture for innovations. Technology-related factors include prototyping problems, uncertainty concerning efficiency, usability, and reliability of technology, and any implementation issues. Where technology-related factors also include the security aspect of technology, another kind of factors influencing technology adoption is related to regulatory dimensions, such as the government support for individual rights and privacy, effective governance, and regulatory structures. There are also economic factors such as the intensity of industry competition, short-term competitive pressures, and so on. Now, furthering on from the factors that influence technology adoption in organizations, strategies for successful adoption were also surveyed to give us an idea as to what we need to look for. Other studies have indicated several strategies, including the provision of government incentives and changes in the technology-related laws and regulations, the support from the management, staff training and upskilling, cultural change, effective communication with stakeholders, and building good ongoing working relationships with stakeholders involved in technology adoption. Notably, it appears that the COVID pandemic doesn't account for the take-up of the latest technologies, but organizations became more adaptable to the new ways of running their business, which may encourage the use of the latest technologies in the future. Now, so my discussion to this point signals that organizations must take actions relevant to their strategic need and context for technology adoption. A message to accountants, a quote I borrow from another person, is that they need to engage with technology and technologists while focusing on solving business and accounting problems. With this in mind, we posed 3 research questions as follows. Number 1, what new technologies are employed by businesses, not-for-profit, and accounting firms of all sizes? Number 2, What barriers do they experience in implementing new technologies, and how do they vary by organizational factors? Number 3, which strategies have been most effective in overcoming barriers to technology adoption and enabling the successful adoption of new technologies, and why? Now I hand over to Professor Jackson to have a look at our research instrument. Over to you.
Thanks, Christina, and good morning or good afternoon to everyone, depending on where you are. So I would like to first of all give you a snapshot of the methodology adopted in this study. So as you can see, we conducted a mixed methods approach. We conducted surveys and also combined that with interviews, which followed on from the surveys, and data were gathered in the middle of last year. So first of all, we had a national survey of 405 accountants who were in managerial roles, and you can see the different levels of management there. And that was, as Christina said, that was for Australian, they were based in Australian organisations of all different sizes and types. Importantly, we did gather data from all states and territories, so they were all represented in the sample. We also conducted a survey of 180 accountants in management roles, and again, you can see the same management levels there in Hong Kong and Singapore. We had 154 managers in Singapore and 26 in Hong Kong. And as Christina also said, just to clarify, we had, so the managers were based in either accounting organisations or they were in a work area or department within an organisation which was based in a different industry. In terms of the interviews which followed on, and they were conducted between July and September of last year, these were done virtually or by phone because of COVID restrictions. And we had interviewees from both the Western and Eastern states of Australia. And they were all based in Australia, all of the interviewees. 3 of them actually completed the survey too, and the remaining 17 interviewees were all new to the study. And again, they were in different management roles and different organisation types. Thanks, Christina. So in terms of the survey participants, I have a breakdown here for you by region. So you can see the 2 different samples there. Different management types, you can see there's slightly different spread by region with a greater level of executive and senior managements from the Southeast Asian sample. In terms of gender distribution, we had pretty much an equal split in Australia, whereas slightly more males compared with females from Southeast Asia. In terms of the industries, I'm not going to go into great detail. Obviously, all of this is in the report, but you can see that the sample came from a very diverse range of industries, and that really applied to both regions where we gathered data from. Thanks, Christina. So just drilling down a little bit more into organisation size and sector, because we did note some differences in responses by organisational type. So just going to the left-hand side, you can see the blue bar relates to the Australian sample and the orange to the Southeast Asian. We had relatively more participants from small businesses in Australia. In fact, that accounted for nearly 44% of the sample. Medium organisations were pretty uniform across the 2 regions. And then in terms of the large organisations, a far greater proportion in Southeast Asia than in Australia. Moving to sector, you can see that the vast majority were from the private sector, with a lesser proportion from public or government sector, and then a very small proportion from not-for-profits. And that was, again, fairly uniform across the 2 regions. Thanks, Christina. Moving to the interview participants, so again, we had 20 interviewees. You can see the breakdown there by their different management roles. We had far more males that participated than females. And you can also see in terms of organisation size and sector that the majority of our interviewees were from large organisations from the private sector. Thanks, Christina. So moving on to present some of the results of the study. So first of all, we looked at the importance of new technology for revenue growth for that particular work area, department, or the organisation, if it was an accounting organisation that they were based in. So you can see the different types of technology that Christina's already spoken about down on the left-hand side. And here we are survey respondents to rate the importance, and you can see the rating scale, the 5-point rating scale at the bottom there, 1 being the lowest and 5 being the highest.
and the mean results. So those are the average ratings on the right-hand side. And we've provided those for both the combined sample and also broken that down by, Australian and the Southeast Asian sample. And essentially what we've done is we've highlighted in red those technologies that were considered most important for revenue growth. So you can see that applied to CRM, ERP, and cloud computing. And they were quite different. They were considered important and then quite different if you compare them to AI, blockchain, and RPA. In terms of differences by region, broadly, you can see that the Southeast Asian sample assigned relatively higher on average importance to all of the technologies compared with the Australian sample. And in terms of differences by organisation size, we did find that those that were based in small organisations assigned significantly less importance to all of the technologies that are listed there compared with medium and larger size businesses. We did note some differences by sector. We found that for AI and for blockchain, there was actually a greater importance on average assigned from those based in the public sector compared with those based in private organisations or not-for-profit organisations. Thanks, Christina. Moving now to the use of new technology. So we asked survey respondents to rate their use of the five different types of technology on the left there. And you can see the rating scale on the bottom, 1 being never used and 5 being always. And this is for their particular work area or department or accounting organisation. So again, highlighted in red are the average ratings. And you can see there that they range, even the highest ones, they're not quite often, they're actually below often, they're somewhere hovering between sometimes and often. And the lowest ones, which is your RPA, your blockchain and AI, actually are between rarely and sometimes. In terms of differences by region, we found, you can see the Southeast Asian sample used on average, they use the different types of technology more than their Australian counterparts. So essentially, I guess from referring back to the last slide as well, those that attributed the Southeast Asian respondents attributed greater importance to new technology broadly, and that's reflected in greater usage among that sample. In terms of differences by organisation size, we found that smaller organisations on average use the different technologies less than those that were based in medium and large organisations. There were less definitive differences by sector, but we did find differences for RPA and for blockchain. And that being, we found that those actually in the public sector tended to use those technologies more than those in the not-for-profit or in the private sector. Thanks, Christina. Moving now to reasons for adopting new technology. So we presented these 6 reasons to the survey respondents in both regions. And these reasons were broadly captured from grey literature and also from academic literature. So they derived also from the TOE framework that Christina's spoken about earlier. And what we've done here is we've ordered the reasons in terms of the highest mean rating. So you can see that right at the top there, efficiency and productivity was a key reason for adopting new technology. And this was an important scale, again, as before, 1 being the not important and 5 being very important. So efficiency and productivity was considered important, and followed quite closely by this was also cost savings as well. And that in terms of the distribution of responses, those importance were, of equal importance really in Australia and Southeast Asia, marginally higher in the Southeast Asian sample. Attracting new clients or new business, also important, and you can see you can work your way down to the least important reason, which is client expectations to have or to use new technology. In terms of differences by organisation size, we found that business growth and having technology that was commensurate with your competitors was significantly more important to large businesses than those of medium size or smaller size. And in terms of differences by sector, Again, less differences by sector, which seemed to be a common running theme throughout. We saw more differences by organisation size and by sector, but we did find that those based in not-for-profit organisations had a lower mean rating for business growth, alignment with competitors, and meeting client expectations. Essentially, those three reasons at the bottom. But we do need to be mindful of the smaller sample size. Next slide, please. Thanks, Christina. And just finally, before I pass on to Rahat, we also looked at what the managers felt or how they rated their work area, organisation or department's success in adopting new technology. You can see the rating scale at the bottom. Again, it's a 5-point scale, 1 being poor and 5 being very good. What we did do here is we filtered out the responses where organisations or those managers from organisations or departments said that they never used a particular technology. So their responses are not featured in these average ratings. Again, marked in red are the highest means. So you can see that CRM and ERP were the technologies that both regions broadly felt they had the greatest success on average in their particular area. And the responses were fairly uniform across the two different regions there. And you can see that the bottom three technologies were slightly lower. And we found that there were no considerable variations by sector or by size in terms of the success in adopting new technology. And thanks, and I'll pass to Rahat now.
Thanks, Denise, and good afternoon from Sydney, everyone. Drawing from technology acceptance model, there are two major factors we thought they will influence adoption of new technology. One is perceived ease use of technology, and number two is the perceived usefulness of new technology. Regarding perception about the ease of use new technology, respondents rated reasons on a likelihood scale of where 1 is unlikely and 5 is very likely, with 6 perceptions presented to the respondents. Now, these 6 perceptions are provided there for Australia as well as for Southeast Asia. Ratings were similar across all 6 perceptions. Respondents' responses varied little between 2 regions, Australia as well as the Hong Kong as well as the Singapore and Southeast Asia, with average rating leaned towards likely 3 or 4 for both Australia as well as Southeast Asian respondents, indicating that respondents considered staff to be reasonably proficient in interacting with, operating, becoming skilled in using and leveraging the functionality of the new technology, and perception of ease of use did not appear to vary by organization size and sector. Now, the second factor is on the influence of adoption of new technology is the perceived usefulness of new technology. In this case, basically, again, 6 perceptions were provided. Christine, if you are on the next one, yep, that's fine. The perceived usefulness of new technology with rating and standard variations are presented in this table. With 6 perceptions, they are using new technology, number 1, and that enables staff to accomplish tasks more quickly. Second is on using new technology that would improve job performance, and new technology would increase productivity, and using new technology would enhance effectiveness on the job, and using technology would make it easier for staff to do their jobs, and staff would find new technology useful for their jobs as well. So in these, this table shows that survey participants from both regions believe that there was a value to be gained from adopting new technology, with positive results exceeding with likely, that is 4, use of technology would enhance effectiveness of a job. And descriptor for all statements in the combined sample. Average rating for all statements were broadly similar within their regions as well, and were only marginally higher in the South Asian sample. Perceptions on the usefulness of new technology did not vary by either organization size or sector. Now, the third thing which we tested, Christina, on the next slide, please. Barrier to adopting new technology. Respondents were also asked to consider the extent to which range of three factors: technology-related factors, number two is organization-related factors, and third is more on regulatory side and economic side, macroeconomic factor, which is environmental factors. Now, and then a number of questions were put forward to the respondents and see their perception about these three factors, and they're presented in this table. In relation to the technology-related factors, security concern is considerable barrier to adopting new technology, and that was because of new risks associated, like, for example, with cyber security and so on. And that was in particular important for Southeast Asian respondents. Concerns were different at security from both the customers and organizational perspective, as where privacy issue is considered as important. Cost is least important, and that is being advocated in other literatures as well, whether it's accounting literature or finance or information systems literature. In both regions, particularly in respect to the maintenance costs, that was the least important in our findings. The average rating for technology competence, compatibility, and relative advantage were relative similar across both regions, with the notable exception of a far higher score amongst Australian respondents for staff computer literacy levels. Other than for relative advantage, small organizations assigned less importance to technology-related barriers, and there were no difference in participants' responses based on sectors. In terms of organizational barriers or related barriers, top management, staff, and organization support and technology orientations were reasonably uniform across both regions. In short, they are all considered reasonably important as barrier to respondents' organization adopting new technologies, and were of a similar level of importance to technology-related barriers, except for security concerns, which are marginally more important. There were no or few observed differences amongst participants' responses by sector or organization size. Our small organization reported much lower average rating than did large organizations for organization support and technological orientation. Regarding differences for staff support, medium-sized organization gave considerably high ratings than did small organizations, where no difference by organization size for top management support was reported. Now, in terms of the last factor, which is economic or environmental or regulatory and economic factors, amongst environmental factors, competitive pressures or competition, regulatory support achieved similar mean scores, with competitive pressures perceived as more important barriers among South Asian participants. Both types of barriers were rated comparably with technology and organization-related barriers, apart from relative advantage and security concerns, which were considered more important. Differences by organization size were evident for competitive pressures, but not for regulatory support, with low ratings recorded for small businesses. No sector-based differences were identified. Thanks for listening, and over to you, Grant.
Thank you very much, Rahat. And I'll also move to the next slide. Denise, if you're able to do that, that would be terrific. And welcome, of course, to those of you who are joining us from overseas and also here in Australia. The final part of the presentation is there's a couple more slides that I'll talk about in terms of the results, and then also some calls to action. So just to let you know, there's probably 5 to 10 minutes, and then we'll open up for questions. Some of the strategies in terms of driving technology adoption. What you'll see from this particular slide is, if you like, from the top to the bottom, the most through to the sort of the least important in terms of ranking of those particular strategies to drive implementation or adoption. You will see at the top, the most important one is what we would call, if you like, the informal aspects. Things to do with developing staff capability. Now, the word capability is broad. It often refers to things like readiness, it refers to mindset, it refers to confidence, it can also encapsulate culture of an organization. So it's this capability and this preparedness to really go for and adopt new technology. You will see that that is the most important, particularly for both. We see there, we've highlighted that with 4.11 on a scale of 1 to 5. And it's pretty similar in terms of Australia and our Hong Kong and Singapore or Southeast examples. If you go down the list, you'll also see the importance of budgets. Of course, these are necessary but not sufficient, but budgets and sufficient resourcing to support technology is crucial. We know that in many of our organisations. And we also know that particular people in organisations, such as senior executives, as well as, if you like, support staff, are also required. So what we did here was really separate out a range of people in organisations, from senior executives through to support staff, as well as in-house IT. And you will start to see the relative importance of that. And what this shows, this particular slide shows in particular, is really how senior executives are really quite crucial. And particularly if you look across to Southeast Asia, there really is a cultural norm in Southeast Asian organisations, our Singapore and Hong Kong organisations, for really driving it through the CFO for the adoption of new technology. That's quite a significant difference between that context and the Australian context. Nonetheless, support is required at all levels and at different stages. But I would highlight to you really the importance of the CFO, the senior executive position. At the bottom, though not quite as important, nonetheless it's still featured, which is the organisational processes that are required. This is, if you like, the more formal, the bread and butter, the nuts and bolts side of implementation. What processes are actually required to support the architecture, the infrastructure, if you like, of new technology. When it's implemented, how is that actually enabled and fulfilled to its full potential? This is where processes often come in. What's really important here is that even though it's the lowest of these 5 in relative terms, with 3.71 on the left-hand side, again, I highlight a difference between the Australian responses and the Southeast Asian responses. So it's quite interesting and important to show both senior executives in Southeast Asia and also the role of organisational processes are both deemed of more importance in those organisations than for the Australian-based respondents. So I think that's really well worth noting, and we'll come back to that, particularly in some of our Q&A. If we can have the next slide, please. This is sort of the last, if you like, data slide, and then we'll start to wrap things up. This is about the strategies that actually help us manage these barriers. How do we actually overcome some of the crucial things that might deal with resistance, reticence, complacency, All of these things, barriers are a broad term, and so we've tried to capture some of these here in this table. There are 3 columns here. You will see the AU, meaning Australia, SEA, Southeast Asia, and INT are interviews. Just to remind you that the interviews only come from the Australian organisations, and we had 20 senior managers here in Australia who reported, just to give you a context of what that column means in this table. The table is also represented by from the most to the least important. So at the top, if you like, the most important issue to really address some of the barriers to technology adoption and implementation is training and development, both formal and informal. Things like touch points, webinars, road shows, online training, instructional modules, various videos. And what we found very important here is that training and development shouldn't be really a one-off just prior to implementation. Again, what was endorsed by many of the respondents was that training and development is continuous, it's ongoing, it's regular, and therefore we're sort of reminding us here to really move away from the sort of quick fix, short-term approach to training, to really embed training, a culture of training around this, continuous improvement, upskilling around the training that's required, particularly from a staffing capability perspective, which I raised in the previous slide. The second point here that also has some sub-themes is around the engagement of staff. When you're training and developing staff, point 1, the most important theme, that is also speaking to the theme of engaging your staff at all levels. How do you do this? In what ways might you be able to present and really engage the staff? And so some of these sub-themes here talk particularly to this, the role of champions, technology champions, IT experts who help drive and take responsibility for this change, to actually mobilize support, canvass benefits, distribute and really share the potentials of this new technology and how benefits for both the organization and clients can really be enhanced through the technology adoption. You will see more qualitative ideas in this set of sub-themes, such as, the innovative mindset. It's a cultural aspect. Often there are, approaches here around people having an experience with something, therefore they're more familiar with it. So when you get to practice and to try, this is also an important way to actually overcome some of these barriers. And it goes without say, if you can buy or practice before you buy, often this actually enhances the implementation and reduces that resistance and sense of the barriers. The third kind of category, very briefly, is very pragmatic. The role of project management, the real sort of way into implementing this. And this engages a little bit with the last point of the previous slide about the processes. How do you actually deal with this in concrete terms? How do you project manage the technology adoption and implementation? There you'll talk about various things about internal collaboration, the role of feedback, significant, change management in either departments or on a wider scale. These are the sorts of measures that we found in our data that were very helpful here. Again, the numbers are relatively small when you look at this category compared to training and development and the engaging of staff as dominant themes. But when you get to project management on the right-hand side, you will see effective implementation is absolutely crucial here, particularly from the Australian perspective. You'll see quite high numbers, 25 being noted there. So effective implementation, great ideas, you've got the technology, but how it's rolled out, how it's implemented, how it's actually put into practice, utilised effectively and efficiently. These are absolutely crucial from our respondents' perspective. Systems and infrastructure, again, this is also part of that project management. You will see that that's a dominant theme that emerged both here in Australia and in Southeast Asia. Staying informed. Now, this is sort of more a kind of an approach. You know, it's an awareness thing, keeping alert, being conscious of what's going on in developments in other organisations, your industry sector, global developments and things like that. So staying informed, a lot of people saw this as an important tool in which you can actually engage and debate and dialogue about what technology should be put in place, and in doing so, how certain barriers can in fact be overcome. People, as I said, like to see and to practice things in operation. That's where trials and demonstrations definitely are very helpful, very pragmatic, but do not underestimate the sort of the value of showing staff what is potentially there. Rather than telling, we find that showing and hands-on approaches are really useful for then people to get what we call the light bulb moment, or the now we see how it's valuable. So trials and demonstrations really are a useful tool there. Here at the back end, not surprisingly, support, both internal and external support. External through obviously contractors and vendors who are selling and using this technology for our purpose in the organisation. Certainly internal support, and perhaps what's a little bit surprising here at the bottom end was the management buy-in and the role of strategy. So based on our previous slide that talked about the importance of senior executives to drive strategy, here we're seeing perhaps some of these same respondents not really seeing perhaps the strongest role for themselves to play in overcoming barriers. Rather than looking at the champions and the IT experts on the left-hand side of this table, you see perhaps management buy-in, other managers, and the role of a technology strategy perhaps being rated relatively low in our sense. So that is a surprise, and in terms of our perspective and what we expect to perhaps see from the data. Perhaps the next slide, Denise, would be great. Drawing things, if you like, to a conclusion. There are two slides here. Just very, very quickly here. I'd like to just remind all of us here about the different stakeholders and the implications for organisations themselves, various professional bodies and associations and what they can do, the role of regulatory bodies and government, and also higher education providers, and around the skilling and the role of, you know, how to put skills and in terms of both current students, early career accountants, the labour market skilling providers, if you like higher education and other technology providers like that. And also be mindful of the cross-national approach here in terms of the Australian and the Singapore and Hong Kong examples. Noting and being mindful that many of our organisations in Singapore and Australia were responding they were larger than some of the organisations in Australia where responses came from. First kind of takeaway point is really about how do how can we actually deal with some of these barriers? Point number one, there are going to be significant barriers in organisations to technology, both technological barriers, people barriers, various financial barriers, just nuts and bolts, project management issues and things like that, implementation. Our kind of conclusion really, and thinking carefully about what our respondents have said, both through interviews and through the survey data, is really a technology strategy is crucial. This is really sort of taking on board, you know, the view that technology adoption shouldn't be just seen as something as a separate item. If you're a human resource specialist, you'll talk about an HR strategy, a marketing strategy, internationalization strategy. Therefore, a technology strategy also makes perfect sense and would actually give great impetus and, if you like, authority to the implementation and adoption of suitable technologies for many organisations. We're not the only ones to advocate for this. We know various organisations and professional bodies have also advocated for the same. The second thing is, and it's an obvious point, but it's an important one. When you see the importance of something, you're more likely to do that particular practice. And so it is with technology. When you see the value of technology, therefore, it does shape, so the attitude will shape the behavior. And here it's about technology acquisition and implementation. What we sort of find here, and really to try and assist organisations, is that there's a range of bodies and entities, such as higher education bodies, as well as perhaps regulatory bodies, that will also help reassure organisations around the capabilities, the supports, the skills, the privacy, the security issues. Many of these are the sort of the genuine concerns that many managers, many finance and accounting managers have. Reassurance around many of the what if questions that they have in their mind about technology, and particularly the most sophisticated and advanced digital technologies here. So we think that these are really important considerations. The last slide here is about the different pathways. When we talk about technology adoption, there is no one approach. Okay, what might occur in other organisations is certainly suitable for those settings. What is right for your organisation is also going to be perhaps a consideration for the context that you're operating in, the industry sector, your size, your client base, resources, and all of those sorts of factors that come into play. That's why our first call to action is around the technology strategy. Get the strategy right for your organisation, and therefore point 3 starts to make far better sense in terms of how you actually embed this strategy within your organisation. Questions around in-house versus external support. To what extent do you engage external technology vendors? How frequently, when, and for what purpose? Do you actually recruit temporarily, or do you actually have an external recruitment strategy in place? So this is where technology strategy meets HR strategy. This is where, you know, senior parts of organisations actually embed all of their ideas, you know, together. You know, so you actually harness, if you like, the technology strategy around some of the other strategies that are actually implemented at the C-suite level. Really important to kind of embed and ensure staff have the right support, skills, capability, and ability to actually enact and implement the technologies that your organisation has actually acquired. This is about ensuring that your expenditure is actually enhancing value, you're getting value for your money, and in fact, clients and your organisation is far better equipped. Fourth, very quickly, about the role of governments. We see that here, particularly, and we hint in parts of our report about the difference in Australia and perhaps the innovation strategy at a national level in Singapore and Hong Kong, and why we've perhaps found some differences between, say, Australia and Southeast Asia in our particular study here. Governments can incentivise, governments can encourage through various forms, incentives, tax breaks, funding models, lobbying of particular technology approaches, technology parks, innovation as a national interest, if you like, is certainly embedded in some countries more than other countries. If you examine that through the OECD indicators, for example. What we say with point 5, just quickly drawing to an end, is that certainly we encourage holistic approach. Piecemeal approaches, add-ons, bits and pieces simply do not work. This again is consistent with point 1, the technology strategy. Take a holistic view. Look at all levels of your organization, from the C-suite, the CFO, your accounting and finance teams, through to all of those sorts of supports that you need. What formal and informal training, supports, and other processes do you require? Consider all of those things collectively. Move cautiously, obviously, until you've got the strategy and the implementation right. This will pay dividends downstream, no doubt about it. Finally, what we're saying is you need to own this approach, own your strategy. Yes, there are certainly other stakeholders out there that are helpful, willing, and able to learn, to assist. Professional associations, government bodies and agencies at all levels, state, federal, and even local. Higher education providers, technology parks, all of these sorts of mechanisms and stakeholders, if you like, can help your organisation. Work with those who have made the mistakes in the past, for example. Learn from avoiding some of those mistakes. This sort of seminar and the results that we're finding are hopefully going to enhance and offer your organisation some of these sorts of I guess, reassurances about what you're already doing and lessons learned from organisations both in Australia and in Southeast Asia. Thank you for your time, and we look forward to some of the questions now.
Thank you so much, Grant. Questions were the key word. So I'm back for the Q&A session now. And thank you very much to all our panelists. I suggest that we all turn our videos back on, and then I would like to pose a couple of questions that just came through from the audience. So let's start with a question from Nelima Karan. The question is, and I'm going to read it out loud, how do we deal with difficult people resisting the change in workflows brought in by technology? Who would like to start?
Mind, I'll start, Jana, with that, if that's okay, and then others chip in as you wish. I think in terms of the findings from the study, there were some key things that we found that would help with engaging staff. One was really about building their awareness for the actual need for the technology, and it's not just another thing for them to have to do and embed into their workflows. And really trying to communicate that right from the start is really critical to get people enthusiasm and to get them on board with introducing and using this new technology. And it came up quite repeatedly about the disadvantages of just getting a random email in your inbox saying, oh, we're introducing this and you're going to have to start using this from next week, etc. But actually having a kickoff event, or possibly having the vendor of the new technology or experts there to really to run a session, whether it's online or face-to-face, to really generate some excitement and to help staff understand the actual critical need for the new technology and the benefits of using it. And also having a lot of support for staff all the way through, not just preparing for it, but during the whole rollout process can often help with resistance. If they see that they're being supported and their peers are being supported, then they're perhaps more open to change, and that might have a flow-on effect for future technologies. And I think just something which Grant touched on as well, that whole notion of developing a growth mindset and innovative capabilities and being open to change and understanding the value of change and having that culture embedded in the organization can help broadly with overcoming resistance from staff. Others might have more to add as well.
Yeah, just very quickly on that point. It's a great question. Generally, any change, whether it's a technology change or any other sort of restructuring, change generally invokes two emotions in people. One is fear and one is uncertainty, and fear and uncertainty are related. And so if you're conscious that people will perhaps have some concerns, the best thing is always to invoke and practice empathy. Put yourself in other people's shoes, ask the questions, walk alongside them, provide those supports, keep asking, what are your concerns? Because often a lot of managers will get frustrated with barriers and with opposition. But if we spend the time, and I think, senior managers will often understand that a lot of their work is dealing with discontent. So you're a manager of discontent. And so managing empathy, managing people's concern for the future through uncertainty and possible fear, that's a great start to walk alongside your employees, your colleagues, and to resolve these issues collaboratively.
Can I add one point here, just a reference on table 9, I think we have provided, Denise, you have just mentioned. Staff interaction with new technology would be clear and understandable. If that communication is there, then you'll find staff motivated to adopt new technology, whether they're difficult or non-difficult staff.
Thank you very much.
Just one quick point, if I may. I think understanding is an important. I know there in literature there is a different degree of adopters, and the behavioral model in particular has actually ranked the different levels from innovators to laggers, and they are generally driven by personality, family background, or work background, and so on. So it's not just the resistance against a particular technology organizations, but there are personal elements there as well. So understanding who you are dealing with and how you can actually assist in accepting new technology, I think that understanding is also important.
Fantastic. Thank you very much. We've also received a couple of questions and comments regarding resources that are required for technology implementation. Gio Fang posted into the box that bigger organizations have more resources to support the technology implementation, while smaller companies will have more challenges, which I believe is aligned with your research findings and translates very nicely into Andrea's question, which is, did you encounter difficulties in small business owners or managers funding desired technology, particularly now that cash flow can be a problem? And how can those SMEs or small and medium-sized businesses overcome such a significant hurdle related to budgets and resource concerns?
I'll just add one point there before the rest of the panel might want to discuss further, but we were quite surprised that cost wasn't a big barrier. We thought that it would be a greater barrier. It didn't come through in the results as prominently as we thought it might, and particularly in terms of differences by organization size. So while the kind of interview responses indicated that resourcing can be problematic, we didn't see that en masse in the survey responses, even though absolutely it's something that's felt on a day-to-day basis, and it's absolutely in the literature that smaller businesses, it's harder for them resource-wise. The others might have something to add further in terms of managing the cost issue.
Yeah, look, so I think you're right. Our study didn't generally find that, but I think Andrea's question, terrific one about how do small businesses really deal with some of these things. Generally speaking, small businesses will probably, like anything, engage in particular acquisitions, whether it's technology or other decisions, suitable for its approach. And that's why we said, look, whatever is is suitable for your context, that's the sort of the technology strategy. So some of the very advanced digital technologies may not always be perhaps within the scope or remit of perhaps some of the smaller SMEs, for example. So we often say acquire and develop stuff that's appropriate for your business and fits the strategy of where you're going. With the resourcing issue itself, yeah, absolutely spot on with that question. There are, of course, from time to time, in different states and here in Australia, there are certainly state government funds and incentives for business, particularly small business. And we're seeing this coming a little bit more now out of the COVID context. Some new grant opportunities, some new funding pools for small business. We also know that many small business owners are part of their own professional association as well as organisations such as CPA. And we often encourage, collaborations where possible, sharing of resources. What is possible with the sharing and or leasing of suitable technologies rather than the full acquisition, for example. So in other words, we would encourage people to explore a range of options. It doesn't have to be purchase or buy. It could be lease. It could be collaborating with other small businesses through small business associations, through local and state governments, for example, through local higher education providers to see if some of their students want to come into your business and actually show some of the benefits and things like this. These are sort of, if you like, low cost ways to perhaps upskill and to be exposed with things that might, in the short to medium term, allow those SMEs to deal with their constant cash flow issues, which we're all absolutely conscious of. So I hope these are some sort of innovative ways to think for those people working in the SME sector.
Very great response. Thank you, Grant. I just noticed we already ran out of time, but I would like to squeeze in one more question from Anastasia, and perhaps we can just get some very quick responses. Thank you. So Anastasia is asking, did you find that the number of technologies or changes occurring at any given point in time in the organization is a factor to successful adoption of new technology?
We didn't see that specifically in the findings, but we did see in terms of discussions around strategies, there was some comments around rollouts of new technology, and we found that some interviewees and survey respondents were very encouraging about the importance of making sure that there's a staged rollout and that you're not just hitting everyone with a new technology or a suite of new technologies at one particular time, but instead there might be, for example, one site has a trial of new technology and then there's a staged approach that's very systematic. Obviously for smaller organizations that didn't come through as prominently, but certainly that did absolutely, that whole notion of project management and carefully rolling out the new technologies, whether in sequence but it was all about it being systematic and very carefully thought after, and making sure that you've got the internal champions and internal expertise to guide others and make sure that it's a seamless approach. That did resonate in the findings.
Fantastic. Thank you very much, Denise. We ran over already, so we need to wrap up, unfortunately, but I just want to say again, thank you so much to you, Denise and Rahat and Christina and Grant. And I will now hand back to Helen. Thank you.
Thank you, Jana. Thanks to Christina, Denise, Rahat and Grant for a great information session today. And also thank you to everyone for your participation online. In the next 3 working days, you will receive an evaluation survey accompanied by the recording of this webinar. We really appreciate your feedback as it's extremely valuable to CPA Australia to help us to deliver better events for you. Thanks again, and we look forward to welcoming you to another CPA Australia webinar soon. Hope you enjoy the rest of your day today. Bye, everyone.